Hello, folks. Drew Rathgeber here with ProFuturesTrader.com with Steve and I for another weekly market update. This is just a quick overview. Once again, you hear me say this every week. This is not specific trade advice, just some things that or some ideas that Steve and I are looking at for maybe you guys to pay attention to. We both of us are in the thick of it. Trading all day with our clients, and the narrative can honestly switch from one day to the next. So sometimes what we say here coming next Wednesday, Thursday, if there's a new economic report or something happens, our narrative can change with our clients as well. But let's go ahead and start with Steve. Steve, are you there?
Yes, Drew. How are you doing?
Good. How about you?
I'm doing fine, thank you. Well, let's get right into it. I had last week at the presentation we made, I brought up the dollar, and that it looked like it was forming a bottom, and it's still we're getting some follow through to the upside with that. Had a big down day today though, but I think that the dollar is working into some sort of ABC type of decline. Usually you'll have a strong leg down, and then you'll have a kind of a relief rally, and then it turns lower to complete the move. And this is how most intermediate cycles get formed, is through these ABC types of moves. And so this has some bearing on the rest of the presentation I'm going to make today. The next slide, Drew, is on the S&P 500. And you can see after a very steep decline, we had a pretty sharp rebound, and it came right up to the previous daily cycle low from back in January, which appears to be some sort of resistance level there. And that's also the green line is the 200-day moving average. And I think it's probably also going to work into one of these ABC types of declines. And a typical daily cycle is 35 to 45 days in the stock market, and they would have it bottoming sometime probably at the end of April, early part of May. So I'd probably exercise caution if you're interested in the stock market. The next thing I want to look at is the oil cycle, and it bounced off this double bottom and has been rallying and doing quite well ever since. We're on day 17. We're only on the third week, so it's still relatively early.
Hold on one second. I screwed up here. Hold on one second.
Okay.
We got to go back and start with the. All right, just start back over with the oil. So hold on a second.
Okay.
All right, go with the oil.
Okay. So the oil market seems to have bottomed in some sort of double bottom, and has since been rallying. We're on day 17 now, only 3 weeks in, so it's still relatively early. And it looks to me that oil is probably going to rally to the first resistance level it could meet would probably be there around the 72 level, where we've got a convergence there of the 200-day moving average and a cycle peak that was from back in late October. And that makes the most sense to me here early on, where this could rally to. That I have that 82 level peak left from the end of 2024 in my sight. That's where ultimately I think oil could go to. So anyway, I'm pretty excited about crude oil. The next chart is gold, and gold broke out of that 30-50 level that we talked about last week, and so new all-time highs. The sky's the limit. Who knows where this could go, but also want to be cognizant of the fact that we're on week 14, and so the cycle's starting to become mature. We're approaching an intermediate cycle time. 17 weeks is a normal time when gold might seek out an intermediate cycle low. So the rule is, you start getting late in the cycle, you need to be controlling your greed. You need to be practicing risk management, looking at stop placement and things like that. And if you get stopped out, you just need to pat yourself on the back and you made a lot of money and feel good about your trade. And then we'll wait for a month or two until the intermediate cycle low gets confirmed, and then we'll do it again. Silver broke out today of the resistance from back in October, and now there's no resistance really in silver until we reach the 3750 level, and that was from back about 14 years ago. Was the last time we were there. So I know there's some things to be concerned about with silver, the timing, because it typically follows gold, and we just talked about where gold is in its cycle. But I really don't see a whole lot that's going to stand in the way of silver reaching $37. But again, you need to be practicing risk management. I wouldn't jump in with a lot of leverage this late in the trade. Another thing, this next chart, that's a 15-year chart of silver, and that shows the that 3750 level that I think is most likely going to be the next level of resistance we could hit. Also wanted to look at copper because I've talked about it the last few videos. It did break through that resistance area, but the rule is on any of these commodities that we trade is any of these commodities that break out late in the cycle, typically it doesn't hold the breakout. And already copper broke out, probably drew in a lot of suckers that got excited because of a breakout. And a lot of people like buying at breakouts, but also a lot of your institutional traders, they like selling their shares on the breakout when it's late in the cycle. So I really don't see a trade in copper right now. And then the last thing I wanted to look at is natural gas. You don't hear me talk about natural gas a whole lot, but I like natural gas. So today we had an EIA natural gas report that came out that was bullish. And you can see that candle that we had. If there's any way to zoom that in, it was actually a kind of a bullish reversal type of candle that we had. The next thing I'd want to see is that natural gas maybe tomorrow will trade above that 10-day moving average. And if it does, I feel like natural gas is probably as good a trade as you could enter of anything that we have to look at. The next slide shows that we are just now entering a period where, historically speaking, natural gas performs really well. So if you bought natural gas on March 30th and you sold it on May 20th, in 13 of the last 15 years has been a profitable trade. So I like natural gas. If you can buy it the day after a swing, there's not a whole lot of risk there if you put a stop just below today's low. So that's what I got, Drew.
All right, so let me go ahead and switch it over to me. Steve just talked about gold. I figured I'd start with that. That's what brought me into the industry over 20 years ago, and I have to agree with Steve. It looks like it's going to be going higher, but I went and did some artificial intelligence research real quick, and we're kind of we're getting to the overconfidence, and we're starting to enter into that euphoria phase. And I know JP Morgan came out today and upped their ante to $3,300 gold. I don't always hold those guys to the value that it's going to actually go to 3,300, but JP just did raise their forecast, and then with the Trump tariffs today, the auto tariffs, it really ignited the precious metals. But I do feel we are late in that cycle, like Steve said, and we are probably getting in the last 2 to 4 week period where we're going to get into that euphoria cycle, and you're going to see a lot of fireworks possibly take place in the precious metals. So right now you've got 36, what is it, 3072 right now showing on this chart. It's going to probably continue chopping its way up is what I'm looking at right now on this, and probably get over that 3100 area. But like Steve said, if it really does spike, and it can run $200 in just a week or two relatively pretty easily. If that does happen, like Steve said, you could have those institutional guys get on the other side and pull the rug on everybody. So we are getting kind of late in the game. So definitely use caution, especially if you're using any kind of leverage, and manage that risk. Let's go and talk about the 30-year Treasury. This is the June Treasury, 30-year T-bond. You can see we had a break here at the 118.12. We broke below. I was talking about it going higher back when was this? June. Actually, it was about the January 27th area. And I said, I'm sensing a change. I am still, even though these moving averages are squeezing and it's showing an indicator of being a bit bearish, I'm still a bit conflicted because I know Trump wants those interest rates to be lower. So I'm still kind of bullish on this market, even though it's cracked this. I would like to see it reclaim that 116.28 area on the chart and close for a couple days above that. But I am still somewhat bullish on this market right now. E-mini S&P, we're definitely in the just basically in the middle of the channel right now. We had that dead cat bounce that I know a lot of people were looking for, and lo and behold, we definitely got it. Right now, what I would be looking for is, maybe in the next few days, if it recovers a bit more, get to the top of the channel here, and maybe look at possibly getting short of this market. That's maybe the 5840 area is what I'm looking at. But just in that general area on the E-mini S&P. Take a look at crude oil. I know Steve did a crude oil. I'm a little bit conflicted on this one. Steve says it's going to go higher up to that 200-day. I'm thinking right now it's been real choppy with crude oil. And on this one, if the markets continue to go down, I think it's going to bring downward pressure on the crude oil market. As you can see, it went right through the moving averages many times, so they're not really holding and trending that well. Could easily get to that 200-day moving average, but I am seeing a slight bearish, just short-term bearish move, or could be a move right here. But we'll have to wait and see if Steve's right or if I'm right, if it continues to go higher or we turn over from right here. We'll just have to wait and see how that happens from here. But if the stock market tanks, I think it could drag crude oil down with it as well. So that's pretty much all I've got this week. I was going to do natural gas too, but I don't want to follow Steve on everything that he's doing. But I was going to do natural gas in the E-mini, but not going to do that this week. But if you guys have any questions, like I said, we're in unprecedented times with the precious metals. I know Steve's been having a lot of fun. I've been having a lot of fun. It's been really great time and period to be on this side of the fence and trading these markets. I know it's been record breaking, to be honest with you. So it's kind of been once in a lifetime, but don't get caught up in that euphoria phase. Use caution, use risk management. And, like I said, a year ago, I was kind of kicking and screaming at $23 silver. I'll never forget it. And here we are looking at possibly getting to $37 silver. So we'll see what happens from there. Other than that, Steve, do you have any more comments or questions for this week?
No, I don't.
You don't? Okay.
Good report.
Yeah, so that's pretty much it. If you have any, if you want to reach out to Steve, you can go to his WadesTrades.net, his advisory service. His phone number is there, or you can reach out to me directly. Like I said, Steve and I both manage a decent-sized portfolio of clients. We are literally in the trenches every day, and like I said before, the narrative can't switch. So be careful what we say here. We may change our tune 4 or 5 days out because, hey, we all know the commodity market can be extremely volatile when those narratives do change, and they will change. So I hope you guys have a great week. Once again, any questions, reach out to us. We'll be more than happy to help you out. Take care and have a great trading day. Take care.